Did you know that if you own a single member LLC, you're essentially operating your business as a disregarded entity on tax purposes? Hi, I'm Matt Ahn, EA with Ahn Company. Today, I'm going to walk you through how your single member LLC is taxed. Let's dive in. Like I mentioned in the beginning, if you own a single member LLC, you're running your business as a disregarded entity, which means your business income is not taxed separately. Instead, your income is combined with your individual income. It will be reported and taxed on your individual tax return, Form 1040. Basically, you're paying federal income tax and state income tax on all your income, includes that your LLC's income. Forming an LLC provides your legal separation between you and your business. It doesn't change the way that your business income is taxed. Then how does this process work? It's straightforward. So your business had your total sales, you subtract all the allowable expenses that equals to your net profit or loss. That amount is added to your individual taxable income. Okay, let's have a look at this formula here. You as a business owner, you had sales minus cost of goods and services that you provided to your customers, minus the wages that you pay to your employees, and minus operating expenses equals to your net profit. This specific amount called a net profit or loss, that's what's taxable, that will be added to your individual income tax. And it's subject to three different taxes: your federal income tax, your state income tax, as well as your self-employment tax. Understanding this structure is crucial to staying compliant with tax laws and also maximizing your deductions to make your business more profitable. Okay, now let's move on to self-employment tax. You as a single member LLC owner, you are responsible for paying self-employment tax, which is essentially your Social Security and Medicare contributions. As of today, January 2025, the self-employment tax rate is 15.3% on the net earnings up to $168,600. You probably want to understand what it is first, right? So when you are a W-2 employee, your employer and you as an employee pay the equal amount of taxes, which is 7.65% on your gross wages that goes towards Social Security and Medicare. However, you are as a single member LLC owner, you're responsible for paying both portions as an employer and as an employee because now you are your own boss, which means you're paying the full amount, 15.3% on your net earnings. While this may seem significant amount to you, it's really important to plan ahead and set aside some funds to pay these taxes. Or I highly recommend paying estimated taxes at least quarterly to maintain control over your cash flow, which is the key aspect to run your business successfully. All right, let me walk you through with an example so you can have a better understanding of how your single member LLC is taxed as disregarded entity here. Let's say you have a food truck business. It's called Amazing Food Truck LLC. It'll be reported on your Schedule C here. Your food truck is one of the best in town, and you hit some of those big events last year. You had gross sales $100,000, and you managed your food costs successfully at around 25%. So your food cost was $25,000, and you hired two employees, you paid wages at $15,000, and you had operating expenses. Let's say you had a POS subscription fee, your bookkeeping software, gas and oil change for your truck, and advertisement, promotions, etc. All of those are operating expenses totaling $20,000. That'll give you a net profit of $40,000. That $40,000 is the amount that will be added to your individual tax return. Let's say you're filing married filing jointly in your Form 1040. You had your LLC's net profit, which is $40,000. Let's say you had a spouse that had a W-2 income of $100,000, and then combining these two together, it will give you a total income $140,000. Obviously, you're gonna have all the deductions, whether it's a standard deduction or itemized deductions, and you also have tax credits to lower this taxable income. But this is basically how your single member LLC is taxed on your individual income tax return. Proper bookkeeping is the backbone of staying compliant with tax laws and also maximizing your deductions for your business profitability. Accurate records not only make your tax return smoother, but also it ensures that you are prepared in case of an audit. Here's how to stay organized and in control. Tracking income and expenses. That's really important. Use bookkeeping softwares like QuickBooks and Wave that are available to you now to record all your transactions there and keep all your receipts for purchases, especially for those items you plan to deduct. And next, separating your personal and business finances. That's really important as well. You open a dedicated business bank account and use it just for business related transactions only. Avoid mixing your personal and business transactions to make your record clear. That protects your legal liability as a single member LLC owner. To sum up, number one, single member LLC is a disregarded entity for tax purposes. That business income is included in your individual tax return using Form 1040 with Schedule C. Number two, self-employment tax. Be prepared to pay 15.3% on your net profit from your LLC. Number three, bookkeeping is critical. Accurate records make you stay compliant and maximize deductions to make your business profitable. By understanding these fundamentals, you can apply tax strategies confidently and focus on growing your business. You can find more information from the IRS page. I'll have that link in the description below. All right, that was all I have for today's topic. If you have any questions around your taxes, feel free to reach out. My contact info is in the description below. If you find this video interesting, please like and subscribe. Thanks for watching.